For the better part of the last hour or so, Dow's down about 560 right now. It's the NASDAQ that's taken real hard today, down 2.5%. The 10-year note yield is at 302, so yields aren't really running away, at least on the, the front end, I guess you would say. But nonetheless, Jim Lebenthal, since you're here, this was a hawkish speech, full stop. The Fed chair said his message was, quote, going to be more direct. Restoring price stability will take some time by using our tools forcefully. He said another, quote, unusually large increase could be appropriate at the next meeting. Decision will be dependent on incoming data. He cited Paul Volcker. He said we must keep at it until the job is done. Said there's going to be some pain as a result. Leisman pointing out today that, in fact, shows how resolute the Fed is going to be. And with all of that, you say what?
So first off, I say this is not a surprise. OK, he wanted to take off the table, Scott, the idea that rate cuts were coming anytime soon. That idea should not have been on the table. Everybody for the last month plus has been saying that, look, we're going to raise above restrictive. Everybody in the Fed governance committee has been saying we're going to raise above restrictive levels and then we're going to stay there. OK, so that should not have been a surprise. What he said is that he's going to be data dependent. 1 month is not enough. Again, that should not have been surprising.
Did he really say he was going to be data dependent?
That's what I heard. What he said, and I listened, you listened, he said, I want to see the totality of data before making the decision. Those were more or less his exact words. The totality of data was a phrase that he used.
I feel like they're going to put a sledgehammer on the economy, Steve Weiss, and then they may be data dependent on what happens next. But this was about as hawkish as you've ever heard this Fed chair, I thought.
Yeah, frankly, I've never seen a market down almost 3% because it expected something. So I challenge that the market's not surprised by it, that everybody expected such a hawkish statement by Powell. Some did, for sure, but a lot didn't. And take a look at where it is. So I think the delusional aspect of what some people are saying really has to stop. They have to think, be a little introspective, and realize that it's been free money, not just in the U.S., but around the world for the longest period ever. There's no time like this in history. None, period. End of story. And so everybody got addicted. Companies, investors, meme players, apes got addicted to free money. And turning that, getting off that addiction like any addiction is painful, a lot of bumps in the road, and it's not a one-way trip. So
he said painful.
Look,
he said it was going to be painful.
Yeah.
He definitely said it was going to be
and
painful.
And it will be.
Sorry. Yeah, well, he said as much.
Let me say one more thing.
Go ahead. Go ahead.
Yeah, the market got to 18 times. In any environment, that is expensive. So you've got to overshoot on the downside. So there's no basis for being bullish here. Congratulations to the bulls who caught the bear market rally and thinking that's redemption. It's not. Get real.
Brenda, he basically told you that the Fed's going to break the economy. I mean, he said as much without saying those exact words. The only question now is by how much? Do they send it into a deep recession? Is a soft landing even possible? Do they even care at this point about a soft landing? Is that really the goal? I thought this was about as sort of plain spoken clear as we've heard this chair.
Well, I think if we consider the circumstances right now, where if we look at economic data, it's still very strong by many measures, especially areas like the job market, which Jay Powell called out as being problematic once again. And we've had this nice market bounce that we've seen. So I think there was no reason for him to be, certainly not to be dovish at all. And I think he needs to send a clear message that the Fed plans to combat this inflationary environment so we don't have long-term inflation expectations getting ahead of themselves, because that's an even bigger problem to battle and will cause more pain, as he suggested. So I think, what I heard is not that they're planning to throw the economy into recession, but that they are planning to keep restrictive policy in place, perhaps for an extended period of time. So to Jim's earlier comment, I think that signals, hey, we're not going to lower interest rates anytime soon, knowing what we know today. So I think it's possible that they could still have a soft landing scenario, especially given the strong backdrop that we're dealing with right now. So I think that's the other nuance and difference this time around.
although Jason Snipe, I mean, as Leisman, I thought so correctly pointed out, the fact that Powell went out of his way to suggest that there is going to be pain, he used that word, just shows how resolute they're going to be. And if the economy breaks in the process, so be it, because he can't stand the pain anymore. He can't stand the pain that inflation is causing so many people in this country that, you know, be damned if the economy suffers dramatically as a result. They've got to get it under control, and he's resolute in doing so.
Absolutely, Scott. I mean, clearly Powell was forceful in saying that they're going to be forceful in stifling demand. I mean, that's the case here. I think, you know, for the Bulls and thinking about this speech potentially being dovish is just the wrong way to think about it. I mean, Weiss makes a great point, and just there's been so much free money out here. He had to come out and make this type of statement. And I think also some confusion last month on, you know, reserving course or changing course early next year, maybe potentially reducing rates. He had to put that to bed as well. So I think the story is really about, you know, too little. If they do too little and inflation becomes more deeply entrenched, that will be more painful than the latter. So I think that's really what the Fed is focused on, and I think rightfully so. And we'll kind of see as inflationary prints come over the next couple of weeks and months, you know, if there's a theme where prints are slowing, I mean, that will be obviously positive for the markets. But he had to come out and state what he stated today.